Hi, let me start with an anecdote. 2 years ago, just before COVID, my lovely companion and I visited Florence in Italy. While roaming the piazzas, we saw a store selling fossil watches. Since fossil stock was on my to-sleuth list, I went in and chatted with the vendor. "What new watches do you have?" I asked. The vendor perked up and said they had some great new lines of watches. I looked around me. "Is it always like this?" I asked. The store was almost empty. "No," the vendor said. "People are still buying fossil watches. They love them, but they are now buying them online." He added a choice Italian word I cannot repeat about management that was now bypassing the stores. I said. A week later, back home, I began to sleuth fossil stock seriously. The price then was about $6.50 or $7 a share. Cash was $4.50 a share. Margins on the online business I knew were double those of stores, so future profits will likely be higher, no? And by the way, all senior management were buying stock. Double? I did some proprietary sleuthing about which I'd rather stay mum. Then I too began to buy. I had half my position in place when COVID hit. The stock fell below $4 a share, less than cash per share. By that time, COVID meant I should stay home, but I could still phone contacts around, and I did. I did some more sleuthing and then bought more stock. So did management. Today, the stock is at triple and still going strong. Now, why am I mentioning this? After all, fossil is not the only stock I mentioned here that tripled. One or two others did too, and many others I mentioned are doubles. I mentioned fossil because this anecdote exemplifies the mindset of a sleuth investor, always looking for physical information not yet in the numbers. In this case, the physical fact was that a new line of watches was successful, that customers loved it, but were buying online, which would be much more profitable to the company. Oh yes, the stock was down on COVID, but so what? This was but a temporary bump on the road for a potential multibagger. Now you may ask, why did all other investors miss the stock? And most still do. Because most investors are blind to any information not given in ink or blips. Blind to physical information, that is. You may think that's an exaggeration, but it's not. And I can prove it. My proof is based on accounting. Yes, accounting. Accounting was invented about 500 years ago, yes, in Italy, by a genius monk by the name of Luca Pacioli, who, by the way, was born 2 hours away from the Florence store where the clerk gave me the golden tidbit that pointed me to a potential multibagger. Pacioli invented accounting by designing two systems, each with a mirror image of itself. The first is a double entry bookkeeping of debits and credits. The other, the balance sheet division into assets and liabilities. Assets on the left, liabilities and shareholders' equity on the right. And it's this second system on which sleuth investing is based. Stay with me, please, because once you understand this, you too can find multi-baggers to which others are blind. Back now to the balance sheet. The left side is the list of the company's physical assets. That's the real side of the business. Real, as in physical. The other side, however, the right side, liabilities and equity, is about who all this real physical stuff belongs to. And unlike physical assets, which are real, both liabilities and equity are pure fictions that exist only in people's minds. Fictions, not real. But they are powerful just the same, because once these fictions are put on paper and signed, they are defended by law, which is a strong fiction also, but a fiction nevertheless. So here comes the secret to sleuth investors' edge for picking multibaggers. Focus on the real and physical assets and check them out physically, in person. Most investors don't. That's because most investors see themselves as scholars or scientists, so they spend their time on the right side of the balance sheet, the fictional kind, the debt and the book value, lease obligations and deferred taxes and other no real things. But they forget that it's the physical assets' quality and value and the changes in them that drives changes in liabilities and equity, which in turn is what makes stock go up. New watches of better quality flying off the shelves, selling at higher margins. Will fictional earnings per share then rise? And will stock price follow? What do you think? Most investors see themselves as scholars and so focus on the fictional side, but stock sleuths like me see themselves as street operatives. And so we talk to vendors and employees and examine the company's products and check out building permits around the headquarters to sniff out expansion and chat up secretaries to learn if the bosses are brilliant or dummies. If you do that too, you too can find multi-baggers of your own, because you'll start seeing what the scholar investors are blind to, the physical facts that appear on the balance sheet left side. Real on the left, fictional on the right. The real drives out the fictional, or really drives the fictional. You think this is too fancy? Well, look around you. Do you see debits and credits anywhere? Or long-term liabilities and book value? No. All you see are roads and trees and cars and buildings and high voltage lines and streetcars and shops with shoes and watches and supermarkets with food. And think about it. Every one of these items is owned by someone, by a real person or an entity, a corporation or a trust or a partnership or a government, an entity with a balance sheet, with this item listed as a physical asset on its balance sheet left side, owned by it. By the way, this ownership bit is fiction too, a commonly accepted fiction, yes, but one that gives a person or a corporation or a government, which of course are all fictions also, the right to use or enjoy items on their balance sheets and keep others from using them. In civilization, this ownership fiction is accepted by all and is proven by a title deed, which is a magic piece of paper that can move a judge to send a bailiff to protect your right to your property. Both property and right are, of course, fictions too, but without them, there will be no markets and no food, no watches, no economy, and no civilization at all. So why am I going into all this stuff when all you want to know is how to pick multi-baggers like this channel somehow magically managed to do over the last year and a half? Because 95% of what non-sleuth do, that is, your opponents and competitors in the market whose money you want to take, they're looking only at fictional side of the company statement, the right side. They almost never physically examine the real physical assets themselves, which of course is what sleuths do. Now, why won't the other 95% of investors do it also? In my experience, most investors neglect the real left side of the balance sheet for three reasons. First, because playing with ink squiggles on paper or blips on screen makes them feel like scientists or scholars, which is the highest status thing. Second, business schools don't teach physical detection methods that any policeman, FBI agent, or newspaper reporter uses daily. But third, it's simply easier to sit back and punch computer keys and go click, click on the internet than going out in the real world and becoming a street operative who check things out in person. Of course, you must know the numbers on both sides of the balance sheet also. However, you have no advantage there. Everyone knows them. But you'll have a great advantage and a chance to bag your own multi-baggers if you sleuth the company's assets physically, in person. You don't believe me? Look again at the list of stocks mentioned here in the last 18 months and see where they are now. You like what you see? You want to be able to do it too? Then turn off the internet, go buy my book, The Sleuth Investor, and try out sleuthing for a while. Trust me, it pays. That's all for today. Let me know in the comments below what you think of the above. Subscribe to the channel, and if you like it, email this video to your friends so they'll subscribe too. I'll see you next time, and in the meantime, thank you very much for watching.